Welcome to Pique Your Interest, your go-to podcast for all things mortgage and real estate. Hosted by Tanner Greenwald and Tim Malaskis. We bring you expert insights to help you buy, sell, and invest with confidence. Let's dive in.
Welcome back to the Pique Your Interest podcast, the podcast where we seek to demystify all things mortgage and real estate related. I'm one of your hosts. I'm Tim Malaskis. I'm a loan officer here at the Millersville branch.
And I am Tanner Greenwald with the Greenwald team here at our Millersville branch.
And Tanner and I were inspired, I would say, to do this episode, specifically this week, because both of us have had experiences where a real estate agent has called us and said, "Hey, I'm hearing this from another lender. Why am I hearing that and hearing something different from you?" And so Tanner and I decided it might be kind of fun to do an episode on things that are, things that we do maybe differently than other people, or things that we are surprised by other lenders doing or not doing. And I think it's going to be kind of a quick episode because it's kind of a handful of things. Just pick out some things that kind of maybe annoy us about what other people do.
Or we're shocked to hear about.
Or shocked. So the first one is I got a call this week from a real estate agent I've known probably like 15 years or so. And she was saying something like, "Hey, I got this client, this lender pre-approved them and said they were good to go. And now I'm under contract and they're telling me they can't get the loan done. How does that happen?" And I'm like, that could be any number of things, but it turns out that this other lender, when they pre-approved, in air quotes, this buyer, they didn't review their documentation. And to be clear, you don't actually have to. We can't compel people, by the law, we can't compel people to have to turn in their documentation to us before we issue a letter. Mm-hmm. Now, there's a difference between a pre-approval and a pre-qualification, and maybe we get into that at some point, maybe in another episode. But the point is, when we issue a letter, I don't issue a letter unless I've already reviewed, pay stubs, W-2s, tax returns, bank statements, all of that stuff. I know that there are people that don't do that. It blows my mind because in a situation like this, that person has child support that's taken out of their pay stubs every 2 weeks when they get paid. If you're not asking the right questions and you're not collecting the right documentation, you would never in a million years know that. And if you're not asking that question, you're not collecting that documentation, how can you feel confident in telling a real estate agent, yeah, this person can go buy a house? That blows my mind.
You had a lot of trust in that client, and as far as I'm concerned.
Yeah. I also know another real estate agent who has this line. He says, buyers are liars. I don't necessarily subscribe to that, but the idea is sometimes people might tell you what they think you want to hear.
Right.
To get what they want.
Right.
And they're not doing it because they're bad people. They're just trying to, qualify for a house.
Right.
So in my world, I like to verify everything because it's not that I don't trust people. It's that if I have relationships with real estate agents, and if I'm telling them that you can buy a house and you can't buy a house, that really damages the relationship. It damages my reputation. It damages the relationship. I want no part of that. So I'm going to verify everything, maybe even twice, before I tell you that you can go sell them a house.
Yeah, that's honestly what we do. I mean, we collect things that we don't even really necessarily need, but then at the same time, it's like, well, maybe we do need them. Let's look at everything you have, and we will decide what goes into the file, what makes sense for the loan if we don't need something. So, yeah.
Sometimes you don't know what you need until you have it, and you realize you don't need it, or you don't have it and you realize you do need it. So it's better to be overzealous in that way.
Yeah, I would never do that, but
same.
Yeah. For me, I've heard a lot from clients as of recently, two different things, and I guess the subject that I'm going to be talking about here is the lenders who don't communicate well with their clients, with real estate agents. Just the communication sucks, and believe it or not, there are some people licensed out there as loan officers who really lack the communication aspect of this job.
Yep.
Two different things I can think of. One of them being programs. So I've heard multiple times if I'm on the phone with a client or anybody just looking to get information about a program where they're like, "Oh, I talked to so-and-so lender and they told me there was no funding in this program, or this program is no longer anymore." And I'm sitting here thinking to myself, that's not true at all. I'm looking at the homepage of the program. They've got funding, that everything's good to go. So sometimes lenders will say things that aren't true, like at all.
Yeah.
Because, sometimes maybe they don't do the program. So they're not going to sit here and tell you that a program's available and go talk to another lender. They're going to tell you the program's not available and there's no funding in it. So.
Or they don't understand it.
Right.
They don't know how to do it.
Yeah. So that is one thing that has come up kind of often for me. But another thing is also just like, if you speak to a client, you pull their credit, which to me, it's like, if a client is giving you their personal information to pull credit, that means something. At least to me, it does. I'm not just giving everybody my personal information. So to me, at that point, you at least owe them a call back or some type of response or something along those lines to let them know you pulled the credit, what's on the credit, what's the score, do you want to go, something along those lines.
Yeah.
You wouldn't believe how many times I've heard that like lenders will pull someone's credit report, collect their documents, and then just never get back to them. Or they take a week and a half to even respond to them, or they just kind of leave them on read. And I'm like, what?
That's wild.
Yeah. I mean, I literally just spoke to somebody who said the same thing. They're like, it's been 2 weeks, haven't heard anything from the lender. So I had to shop and find another lender. And I was like, well, welcome, But yeah, that's one thing that I hear often.
Yeah, it's really interesting. The very first day I ever started in mortgage banking, I was sitting in the office with Mike, and he took a phone call from someone to pre-approve them. And at the end of the conversation, he got their date of birth and their social security number. Like, it was nothing. And I remember, I was young, I was like 23, and I was like, I can't believe a total stranger just gave you that information.
Yeah.
But it happens all the time, and it's easy to take for granted because it happens all the time.
Yeah.
But we should never take it lightly, the fact that we're given this personal information.
Yeah. No, I don't take that to heart, but I do. It's like I don't.
You have to.
I don't share any of that information. Like, that's people's personal lives, so they're trusting you with that. Give them a phone call back at least. You know what I mean?
Yeah.
Yeah.
Jeez.
What else, Tim?
I would say another thing that I hear a lot about that I just don't understand. I mean, I get it, but I don't get it. Is like an over-reliance on technology. So a couple weeks ago, I got a call from a real estate agent who was trying to refer somebody to me. They were like, "Hey, I have someone. I tried to get them to talk to you. They decided they want to talk to, insert big bank name here, and they were not steered. Is not the right word. They were told that they should apply online, and so they did. They applied online." They got an email back that said, you're pre-approved for blah, blah, blah. Meanwhile, they never talked to a person. Yeah. Never once talked to a person over there. Yeah. And there are times when it makes sense to do an online pre-approval. Right? If you're overseas and our times just don't match up, or, you're in a pinch, you work night shift and you sleep during the day and I can't talk to you during the day. Like, there are definitely situations where that works, and I'm happy to offer that as a solution. But my preferred method of pre-approving somebody or pre-qualifying somebody is I want to talk to you, because it allows, not only does it allow me to build a good relationship with you, but it allows me to ask you questions and you ask me questions and there's feedback. If I say, or you tell me you're self-employed and I say, how much money did you make? And you tell me, I shouldn't just take that at face value. I mean, obviously, I'm going to get the documents, again, going back to point number one, but also because I want to make sure I ask the follow-up question. Is that how much money you made before you wrote off some of your expenses? Is that after? Like, is that what you showed the government you netted? Is that your gross? Like, there are a lot of ways that probe and get those answers. And I think if you're over-relying on technology, you'll never get the answers that you're looking for. Yeah. No, not never, but it'll take a really long time to get those answers. And that's silly. It shouldn't take that long. I feel like also, people we are lending to, they're all ages. I mean, you've got people that are 75, 80 years old buying their first home, or, in their 50s, 30s, whatever. Some people don't want to just be sent a link and have to download something. Like, I think of the older generation. They're so over all the new technology and all the new apps and stuff and how to figure it all out. So, like, sometimes people just want the old school way of just talking on the phone, having a video chat, whatever, just to get some information from you. Yeah. I have a client coming in later this week, face to face. Yeah. Like, that's real old school. Yeah. Real old school. To think about that. All right, what else you got? So I actually had lunch with a realtor the other day, and she just kind of happened to mention we were with somebody else, and she had said, I've been,
working with Tanner for a long time and the Greenwald team. And the reason that I am so loyal to her and, continue to work with her is she gives back what I give to the team kind of thing. And what I mean by that is, sometimes you have lenders out there who are just referral based. Like they don't necessarily go out and try to find their own referrals. They wait for other people to refer them business. And if that's how you want to conduct your business, great, good for you. I do think that there's an issue if you're not giving back what you're receiving from people. So if you have a group of realtors it's giving you some type of lead or good tips and tricks or whatever, or they're helping you in some way and you're not reciprocating that back to them, that's annoying. That's annoying to them.
Right.
But it's like at a certain point you have to expect the well's going to run dry. And you're not going to keep getting referrals. You've got to give it back, dish it back out. So that was something that she was talking about specifically. She was like, all the other lenders that I've tried to partner with or work with, they just take my leads and they close them and they do a good job. But like I get nothing back in return. And she's not okay with that. So that's something that was brought to my attention.
Yeah, you have to provide value in multiple ways.
Yeah.
In order to keep referrals coming in.
Yeah. You can't just take and never give,
Yeah. I mean, think about any other relationship in your life. It would be draining if you were on the other side of that.
Yeah.
And you'd never want that to happen.
Yeah. So that was brought to my attention and I was kind of shocked. I was like, really? She's like, yeah.
Interesting.
Yeah.
Real interesting.
Yeah. What else?
I would say that something that I hear that other lenders don't do is they don't do a good job at educating clients. Mm-hmm. So things like explaining credit, how credit score is derived, what your credit score means for you, giving people options like, you could go FHA or you could go conventional. Here's what both scenarios look like. Or you've got some money to work with. Maybe you don't want to put 20% down. Here's what 10% down looks like. Here's what 20% down looks like. Let them... it's not my mortgage payment, right? Mm-hmm. Like I'm not parting with the cash and I'm not making that mortgage payment. So it's not really my choice what you do. Yeah. Most of the time, sometimes there's only one option that you have and that you have to do that. That's a different story. But when people have the ability to do more than one thing, I think the right thing to do is present options and say, here's option A, here's option B, here's option C. Here's what's good about this. Here's what's bad about it. Just, list the pros and the cons. Just like any other decision you make in life, you have choices. You should be educated about it. You should thoroughly think through what makes the most sense for me, now and in the long term. And I hear a lot of stories from real estate agents and just even personal experiences. People come to me and they say, hey, I've already talked to somebody and they said, this is what I'm going to do. And, I pull their credit, get their docs. And I'm like, that is an option, but it's not your only option. And, here are other things that you could do. And here's why, some of them may make more sense. Yeah. So I think if you're not educating clients and you're not giving feedback and providing options, then I think you're missing the boat. Yeah,
I think people like options too, Yeah. Yeah. Let me choose between any of these. I think another thing that could just totally kill a deal, if I'm being honest, is if you aren't kind of brushing up on guidelines or how to do things when it comes to the actual loan process.
Preach.
So, for real though, like Michelle on our team, she always says this, I'm in the guidelines every day, all day, and you laugh because I know you've heard it. Yeah. But she is, and we both are. So it's like guidelines change all the time. Rules change all the time. The way we have to calculate things, that could be changing. So if you've got a self-employed borrower, like Tim was talking about earlier, there's certain ways you have to calculate that income and you have to ask certain questions. Yep. So if you're kind of just collecting people's documents and you don't know what you're doing and you're not really doing your due diligence and looking at your guidelines or how to really be doing it, and then you give a pre-approval and come to find out you completely calculated the income wrong, or you didn't include certain debt, or, you didn't make sure they had enough assets to be able to purchase. That could really screw a deal. And that's the last thing you want to do because you're going to definitely, make people mad in that scenario. So I think just, you learn a couple of things. Like if you're sitting at work and you're bored and you're in this industry or any industry, look up a couple of things about what you do for your job and then try to do it. I think that would make you a better person, lender, or whatever. Yeah.
I'm like Michelle. I'm in all regs all day. Mm-hmm. I'm constantly looking things up. People are constantly coming and asking me questions, and sometimes I know the answers, sometimes I don't. Yeah. I even had a situation earlier this week, actually, where I wasn't sure the best way to calculate somebody's income.
Right.
And so, I put together my thoughts in an email and I sent it to one of our underwriters, and she looked at it. She got back to me in like an hour, maybe like 45 minutes to an hour, and said, this is how I would calculate it. I think this is the right way to do it. So I would move forward with this income and you should be good. So even 21 years of mortgage banking, I still have questions and I still need to learn things. So I don't know how you're not constantly trying to improve yourself.
Yeah, I almost always have somebody double check my income. Not that I don't trust myself, but like at the same time, I could be looking at a sheet of paper and there's 100 numbers on it, and I'm like, okay, that seems to be it. And then I'll double check again, and then it's like, okay, let me go ask somebody just to make sure, So because people are buying homes, this isn't a toy, this is a home, so you want to make sure that you're getting them in the home that they, if they're making income, give them the income on the application. So that's something that I think I've heard before.
Yeah, I think it's interesting. We all have the same job. We all do it so differently. We approach it differently. Some people collect documents. Some people don't collect documents. Some people refer online portals. Some people don't prefer online portals. So it's always been funny to me that we're all different people. We all have the same job, but we all handle it so differently and go about our daily business so differently. I think with us in our branch, I think there's like a common thread. Some of us are very similar in the way that we do things. But when I hear things that other lenders, that other mortgage companies or banks or credit unions are doing or not doing, it blows my mind, because I can't think of any other way to do this business than the way that I do it.
Yeah.
And when somebody's like so far outside that box, I don't get it.
Yeah, I don't get it either. I will say, though, if you are in the mortgage industry and you kind of feel like you're stagnant or stuck, and you've been doing like your routine for however you do your client's pre-approval or whatever, and you realize that it's been the same since you started, or it's been the same for a while, try something new, look into the guidelines. Maybe you'll find something different, and then you can have your approach be different, and that might excel your business. So, yeah, but I think... and I'm not sitting here saying that I haven't done any of this stuff before. You know what I mean? Like,
right.
you have a learning point. So if you're listening and you're like, crap, I think I do some of that stuff, that's okay, but you have time to turn it around. But these are things that I think we've heard from multiple people, clients, realtors, whoever, that they complain about. And we're like, okay, note to not do that.
Yeah, my notes of to not do are a lot longer than my notes of this is what I should do.
But that's how you grow. So.
Yeah, no, absolutely. No, and then we're far from perfect, but I think that the goal is to get closer to it each time.
Yeah.
So that's all that we have for you today. We're all different. We all handle things differently, but there are just some things that are surprising to us, and just wanted to bring that to your attention and throw out this episode to you guys.
Yeah, well, have a great day.
All right, see you soon.
Bye.